This podcast is for informational and educational purposes only and should not be construed as investment, tax, or legal advice. Any examples or frameworks discussed are general in nature and may not be suitable for all investors. All investing involves risk, including the possible loss of principal. Past experiences and planning approaches do not guarantee future results. In this episode, I'm going to tell a story about a client of mine who built an impressive portfolio of real estate, but in reality, he felt like he was constantly lugging around a backpack full of bricks. On paper, you would say that he won, but there was something else going on beneath the surface. So the numbers said that he didn't need to work anymore. His investments produced more than enough income to support his lifestyle indefinitely, at least by my measure. And he had wanted financial independence, but he was missing something critical here. He still went to work every day. He still dealt with the same problems, still carried the same stress. And maybe that doesn't sound unusual because a lot of people continue to work after they reach financial independence. But the real issue wasn't the job. It was, in my opinion, the portfolio. So that portfolio that he built it piece by piece over time. And each property had been a good decision at the time in a vacuum. But eventually it became really complicated and not in a positive way. He had properties that were scattered across different places in America. Multiple property managers were a necessity, and the threat of tenant turnover was constant. Now, individually, none of these issues were a catastrophe, but altogether, it just was a steady stream of friction. He had constant emails, phone calls, maintenance issues, manager turnover, and occasional dishonesty. So what started out as a cool idea for a wealth building strategy turned into a major operational burden for him. So during one of our meetings, we just took a step back and looked at the whole picture, and not just returns, but the complexity. And then after reviewing his situation, we discussed a potential approach to simplify his portfolio. So the idea was to consolidate the capital into just a couple of larger investments where he could get some economies of scale and management could be centralized. And in his case, the timing actually worked in his favor because he could sell these properties without triggering immediate tax consequences or trying to rush through like time-constrained 1031 exchanges. So it's a decent setup. He could just sell and then take his time to decide what came next. And he agreed. He saw the appeal. And I can see this playing out across a lot of different investors. The portfolio simply becomes more complex than the life it was meant to support. And the challenge there isn't the strategy, it's the transition. Because those assets probably took a long time to develop and accumulate that gravity. And then you might have managers involved who have their own incentives where you're saying, the market's improving, just wait to sell, or, we're about to turn the property and increase cash flow. So there's these competing ideas there that may make you second guess what you want to do. It really is about inertia, keeping the status quo and dealing with the devil you know versus the devil you don't. And if inertia is keeping you from moving in a better direction for yourself, then I'd say you're not really thoughtfully executing your portfolio anymore. You're just sort of maintaining it to prevent it from collapsing. So here's a hard truth about wealth, that financial independence doesn't automatically create freedom. Just creates the option for freedom. And exercising that option means you might have to let go of decisions that worked in the past, but are no longer going to get you where you need to go. You might need to sell assets that were once great investments, but no longer serve you. And you might have to tear down some structures, figuratively, that took you years to build, which can be a hard pill to swallow. But simplifying things can be really helpful. Success builds momentum, but sometimes that momentum keeps you moving forward, even after you already arrived where you wanted to go. Now, I'm not trying to say that any one investment is better than the other. Like, everyone has their own situation that they need to look at. I'm just saying that if your portfolio is causing you a headache, and taking a step back and considering where you might make some adjustments and then how you make those adjustments could be really beneficial. A great starting place is if your portfolio turned all to cash, so all of your assets were simply liquid tomorrow, and you had to rebuild it from scratch. Would you build the same thing again? If the answer is no, then maybe it's time to start simplifying. Again, it's not because the assets are bad. because your life might have changed. And sometimes the smartest financial decision is not adding something new, it's subtracting something old.